Welcome to Yahoo Finance's flagship show, The Morning Brief. I'm Brad Smith. Let's get to the three things that you need to know today. First up, U.S. stock futures. Little change today as the S&P 500 trades just within points of its all-time high. Meanwhile, tech stocks are leading the charge as the NASDAQ 100 closes out at a fresh record. But the higher stocks go, the louder the concern that multiples are starting to look frothy becomes. The S&P 500 is currently trading at 22 times expected profits in the next 12 months. That's 35% above its long-term average, according to data compiled by Bloomberg. Plus, traders are awaiting a second day of testimony from Federal Reserve Chair Jerome Powell. The head of the Fed treaded softly when he appeared before Congress on Tuesday, indicating the central bank is monitoring data before making any adjustments to its policy. Investors will be closely watching for any signs on the central bank's rate path ahead of its July meeting. And Nvidia's annual general meeting kicking off today. Shareholders will vote to re-elect the company's board at the event and will be watching an advisory vote on executive compensation, but no major fireworks are expected there. The meeting comes at a time when some on Wall Street are calling for the company to reach a $6 trillion valuation. That is the anticipation knocking around this morning. And analysts at Loop Capital note that Nvidia is at the front end of the next golden wave of Gen AI adoption and expect a material leg of stronger than anticipated demand. Let's get a check-in here on stocks as we're taking a look at futures this morning. The S&P 500 trading just within points of its record high. 6147 is the key number to watch today as we're taking a look at some of these fractional gains, flat just barely to the upside for the Dow futures, not even fully registering here, but 2 points to the upside. And then additionally, you're seeing the NASDAQ futures right now. That's higher by about 0.4%. We've got a ton to keep an eye on. So let's turn now to our top stories of the day. First up, the S&P 500 nearing an all-time high with tech stocks leading the charge, plus Nvidia kicking off its annual shareholder meeting today. And, oh yeah, Fed Chair Jerome Powell back on Capitol Hill. Don't call it a comeback. He's been there for days. And that's to face the Senate Banking Committee here today. Are rate cuts on the table? That's the big question. Joining me now, we've got markets reporter Josh Schaefer, senior reporter Ali Canal live from the NASDAQ, and Fed correspondent Jennifer Schonberger live on Capitol Hill. Josh, let's start with you. Some Wall Street bulls say that the market has more room to run even from here. What's the anticipation?
Yeah, Brad, that's right. Brian Belsky from BMO Capital Markets coming out yesterday and boosting his S&P 500 target from 6,100 to 6,700. That would be about a 10% gain right now. But as you were noting, sort of the key story right now in terms of just the major index, we're back near record highs. The S&P 500 within 1% of closing at an all-time high. The NASDAQ 100 did get a record for the first time since February yesterday, so we were back in record territory for multiple averages. Really the key drivers, Brad, have been that de-escalation we've seen in the Middle East. So you've seen oil prices come down. That has driven stocks higher. Other key catalysts right now has been, again, those rate cut hopes starting to build into the market. We've seen rates come lower. 10-year Treasury yield at its lowest level since early May. Those have been two of the key catalysts. Then as far as what's been moving markets the most, as you mentioned, I know we're going to get into more in a minute here, it's been that tech trade. Stuart Kaiser over at Citi noting that it has been an AI tech momentum trade, that sort of triple-pronged approach there, driving the markets higher, getting us back near these record highs.
So let's talk a little bit more about that tech trade. Ali, I want to go to you as we're seeing you over at the NASDAQ, the home of some of those major mega cap tech companies here. And so all these things considered, we've got a big Nvidia shareholder meeting. Nvidia, one of the major players that could lead to the continued thrust higher for the markets here. What's kind of knocking around ahead of that Nvidia shareholder meeting?
Right. Well, as Josh was saying, tech has really been leading the gains that we've seen over the past year. And if we take a look at this chart from Evercore ISI, this stuck out to me. It shows that the Magnificent Seven, those mega cap tech names, they're the ones driving this AI boom. And they're once again outperforming the broader market and by a pretty large margin, too. Since late 2022, the Mag 7, that's that white line there, that surged more than 200%, far outpacing the S&P 500 and even the broader tech sector. We did see that dip late last year and then again in April, right around Trump's Liberation Day tariff announcements. But the rebound here has been strong. It's been swift. Evercore analyst Julianne Emanuel has said that this chart alone proves that it pays to buy low, stay patient, and focus on that strategic core of AI-centric stocks. Those are the areas that are going to continue to deliver long-term strength, even through all of the macro noise, all of these headlines, market pullbacks. Bottom line, if you stay invested, you're likely going to be rewarded with this crop of stocks. And I also want to take a look at the Wi-Fi Interactive here and look under the hood at the NASDAQ 100. You were just mentioning that we were at a record there. And if we take a look at month to date, you're going to see that those Mag 7 players, your Nvidias, your Microsoft, your Amazons, they're leading a lot of the gains here. But if we equal weight that out, you're going to see Micron, AMD, Marvell, Intel, other types of companies, chip makers, those AI-centric stocks, they are also having significant gains here. So it's not just the Mag 7. Tech as a whole is really driving this rally, especially with names that have direct exposure to artificial intelligence.
All right, of course, we're going to be hearing from one of the poster child of artificial intelligence, I should say, in Nvidia at that annual meeting here. And then additionally, Jennifer, while we've got you, you're back on Capitol Hill here. What are you hearing in the walls and in the halls of Capitol Hill and in D.C. right now, going into day 2 of Fed Chair Jerome Powell's testimony?
That's right, Brad. I am here in the halls of the Senate, where Fed Chair Jay Powell is back on the hot seat for a second day of testimony before Congress. In about an hour from now, he will testify just behind me in this room for the Senate Banking Committee, where he's expected to face many of the same questions that he faced before the House on Tuesday, as far as the outlook for interest rates, the economy, the impact of tariffs on inflation. And Fed Chair Powell expected to reiterate to Senate lawmakers that the Fed wants to wait and see what the impact of tariffs will be over the summer months before making a decision on how to adjust interest rates. He said that we really haven't seen much of an impact from tariffs on inflation yet, so the central bank doesn't need to be in a rush given that the economy remains strong and the job market remains strong. Powell did not rule out explicitly a rate cut at the Fed's next meeting in July. However, he seemed to suggest that if inflation comes in mild over the summer months when he expects tariffs to really hit inflation, then that could suggest that a rate cut would be in play for September. Now, ahead of this morning's hearing, Senate Republicans, led by Chair Tim Scott, sent a letter to Chair Powell overnight saying that he needs to justify what they call lavish renovations of the Federal Reserve's office buildings. They say that the Fed has been spending billions of dollars on renovation of 2 of its offices in Washington, D.C., alleging that the cost of renovation is increasing by more than 30% to $2.5 billion. Citing media, the senators say the renovated buildings will include a rooftop garden terrace, ornate water features, new elevators that drop board members off directly in their VIP dining suite, and the use of white marble with a private art collection in the basement. Now, Senate Republicans also expected to call on Chair Powell and the Fed to streamline regulations for banks, specifically community banks. They say the cost of compliance is burdening them and weighing on their growth and making loans. Back to you.
I mean, I truly don't know how you could make policy decision without rooftop Italian beehives. So honestly, I might be on their side with this one. Josh, Allie, Jennifer, thanks so much. Good to see you, Jennifer. We'll be checking back in. It's time now for our chart of the day with the S&P 500 within 1 percentage point of an all-time high. Let's send it on over to Josh Schaefer for a look at what Wall Street forecasts right now. Josh?
Yeah, Brad. So if you go back to early April, what we're looking at here is how targets, S&P 500 targets for year end of 2025 fell and then rose. So the big dip you see, of course, that was your tariff reaction, right? That was all sort of in the middle of April as recession fears rose, that estimated effective tariff rate hit its highest level in over a century. Strategists were worried in the same way investors were, right? But as we've had this rally, stocks have started to come back. You see more than 8 Wall Street strategists have now boosted their S&P 500 target, the latest being BMO's Brian Belsky. He boosted to 6,700 from 6,100. And really what Belsky was pointing out is, back when he first lowered his target, he sort of argued a 30% rally back to 6,700 didn't quite make sense. That was, of course, right before April 9th when we saw that massive rebound in the S&P 500. Now that things look more promising for the economy, for earnings, Belsky is feeling more sanguine in general about the equity market. Josh,
thank you. Appreciate it. We're going to be continuing to watch how some of these Wall Street forecasts move around. Now time for some of today's trending tickers. We're watching FedEx, General Mills, and Tesla. First up, FedEx's weak outlook is weighing on the stock despite a solid fourth quarter. The shipping and transport company declined to provide a full year sales or profit forecast due to uncertainty brought on by President Trump's trade war. Leadership said U.S.-China shipments, the company's most profitable route, it fell sharply in May. FedEx's chief customer care officer said on the earnings call that the company simply cannot predict how trade tensions would play out in the months ahead. Next up, we're also watching General Mills' annual profit forecast fall below expectations as waning demand took a toll on the baked goods owner. Uncertainty from President Trump's changing tariff policies, tightening consumer spending in the U.S. General Mills, which owns brands like Cheerios, Pillsbury, and many more, they have attempted to use new products to boost demand, but costs associated with various acquisitions have taken a toll on the company's margins. Going into the call, analysts expected declining sales and earnings because of the weakening packaged foods market. Finally here, Tesla's new car sales in Europe plunged on an annual basis in May. The 28% decline comes as overall new car sales rose nearly 2%, according to data from the European Automobile Manufacturers Association. European sales of all electric cars rose more than 27%. May marks the fifth straight month of sales declines, though, for Tesla in the region. You can scan the QR code below to track the best and worst performing stocks with Yahoo Finance's trending tickers page. Coming up, we count you down to the opening bell on Wall Street with stocks trading within points of a record high. All that and much more coming up on Morning Brief. Defense Intelligence Agency reports show U.S. strikes on Iranian nuclear facilities over the weekend did not fully destroy the nation's nuclear program and may have only set it back by months. The news was first reported by CNN. Speaking today from the NATO summit in the Netherlands, President Trump disputed those findings.
I believe it was total obliteration. Can you imagine after all of that, they're going to say, oh, let's go and do a bomb. There could be a day in the future, and then somebody else taking our place will be saying, don't do it. And maybe they won't do it as well. I don't know. But they're not going to have a bomb and they're not going to enrich.
So far, markets don't seem too worried about any continued Middle East tension, but there are remaining concerns investors should be taking into consideration, perhaps. Joining me now, we've got Ambassador Mark Ginsburg, former White House Middle East advisor, and Tamar Essner, Vectus Energy Partners principal. Great to have you both here with us today. And, I want to begin with you, Ambassador Ginsburg, because as we just heard from the president, he doesn't believe that Pentagon report, or of course the findings within that Pentagon report, that there wasn't full and complete, a takeout as strategically positioned by the administration, and additionally the press conference that happened later on. What is the data that the people should be believing, and that investors should be believing at the end of the day?
What investors should be believing, what I should be believing, let's put it this way. No matter what has happened, the president's going to believe what he wants to believe. Israeli intelligence, the reports from that are reported out of the Defense Department suggest that unfortunately the B-2 attacks using the bunker busters did not obliterate, or use whatever word you want to use, decimate the key targeted sites. And worse, that there's a chance that a great deal of the equipment and the enriched uranium may have been transported out before these anticipated attacks. I would not like to be the Director of National Intelligence, Tulsi Gabbard, today, caught between, once again, a president who wants to claim victory without having sufficient evidence to do so, and the raw intelligence that is being contradicted, but not only in the United States, but also by the Israelis.
So with all of this in mind, Tamar, we know that energy over the course of the escalations in conflict and then even over the most recent hours and days, that's been in flux. And as we've moved off of some of the higher risk of reaching back to $100, $125 a barrel that was talked about at the onset of the conflict, even as we've seen that perhaps mitigated, what is the kind of near-term impact that we might see that needs to be monitored still, even as the Straits of Hormuz are one area that investors have had to consider, and if there was blockage of that, and if there was rerouting of ships? How are you really analyzing this from the energy perspective?
Sure. Thanks, Brad. Good to see you. So as the ambassador suggested, we may not be entirely out of the woods just yet with regards to the Middle East and Iran's nuclear program. But specifically for the oil market, they are not concerned about it because they view recent events as de-escalatory, at least for the foreseeable future. So this is a clear bearish signal to the market and a return to fundamentals unless headlines change. And the fundamentals going into this war to begin with were generally quite bearish. So there's generally viewed that even if this truce between Iran and Israel is temporary, and even if the latest intelligence reports are correct that Iran's nuclear program is not indeed really obliterated, for the foreseeable future, all three parties, US, Iran, and Israel, are viewed to want to de-escalate and sort of go home and proclaim victory to their internal bases. So from the oil market's perspective, this is de-escalatory, and the oil market in particular was very narrowly focused on the Straits of Hormuz. So even if there are sort of some continued skirmishes, we've talked in other episodes about how the Houthis are really a wild card here. Unless that Straits of Hormuz is attacked, the oil market is going to continue to fade geopolitical risk. And we view recent events as saying that the likelihood of the Strait of Hormuz being impacted is increasingly lowered.
And so it sounds like if we're continuing to see a containment in any spillover in terms of the conflict, then we're also going to be able to see continued perhaps resolve within some of the energy prices that we're monitoring as through the equities and commodities market, at least right now, Tamar.
Yeah, so I mean, seasonally, we wouldn't want to get overly bearish. This is a strong time of the year for demand, both in North America, Middle East as well. You have the likelihood of OPEC adding more barrels into this market. So it's a difficult time for, for the energy equities. Certainly we see that in the last price rally, producers in the U.S. hedged and locked in higher prices. So we expect that production growth is going to remain maybe not quite as strong, but still strong enough to actually have a dampening impact on prices sort of later on in the year when demand sort of more seasonally falls. So sort of back to fundamentals and sort of barrel counting, if you will.
Ambassador Ginsburg, one of the major kind of thought processes that other officials around the world and representatives of their nations and countries had was, okay, how do we need to position ourselves if this does blow into something larger and become something larger, now that over the weekend at that time, the U.S. had gotten involved and targeted in a targeted attempt and attack here essentially on this one specific site. How are those same countries thinking about, okay, are we just putting that in the rearview mirror and coming back to the table on negotiations around tariff policy? Like how do those conversations transpire from this juncture, from your own assessment?
It's interesting. I was watching the NATO summit meeting, and of course, the entire situation in the Middle East leaked in to the situation. And of course, as Tamar said, the Straits of Hormuz here are critical for NATO security as well. But I remember here, we have nothing more than an oral ceasefire. There is nothing on paper that suggests that the Israelis and the Iranians, least of all the Americans, have reached anything other than a cessation of hostilities and everybody's going back to lick their wounds. And despite the fact that the United States and President Trump wants to declare victory and go home, the war between Iran and Israel is going to continue. It may not continue tomorrow with missiles flying back and forth, but the clandestine attacks on Iran's nuclear installations, the business that was not completed, is clearly going to have to be completed by the Israelis, because if the president just declares victory and says, I'm out of here, the Israelis are going to have to look in the mirror and say, well, hold it a second. The whole point of our war for the last 12 days was to set back the Iran nuclear program. And the president said it's gone. There's no nuclear program. Well, with all due respect to the president, I'll trust the Israelis more on the intel than on his interpretation of the intel.
Just lastly, while we have you, Tamar, it was interesting what President Trump has also said as the falling action in this transpires, essentially saying that China should be able to buy and can and has the option to buy Iranian oil, but is also trying to press them to purchase U.S. crude instead. And this at a time where we know that the negotiations between the U.S. and China on tariffs, there is an energy component within that. So how significant is that positioning, especially knowing where China might have more interest in purchasing from other international partners?
Yeah, that was actually kind of a head scratcher. A lot of the traders and contacts in the industry that I talked to were befuddled by that and think that it doesn't actually mean anything different from a barrel counting perspective. China, we imagine, will continue to purchase as much as they can from Iran. It's the quality and price that they want. I don't think it actually will translate into any change in policy unless and until there is, a signed agreement with Iran, which, as the ambassador said, we are a long ways from actually having. So I think the market sort of wrote that off and isn't interpreting it bearishly, suggesting that there'll be yet more Iranian barrels on the market. We think that the flows are basically already at max. And despite everything going on with these headlines, Iran has continued to pump oil unabated and send it without issue to China. So sort of a non-issue for the market from a pricing perspective.
Tamar and Ambassador Ginsburg, thank you so much for taking the time here this morning and giving us your assessment and evaluation of the matter as it continues to have some elements that unfold. Appreciate it.
Thank you.
Thank you.
That does it for Morning Brief, everyone. Morning Bid is next. Brian, I hear you have coverage of Nvidia and a CEO on the show. What's coming up?
Half hour, Brad, we're going to really dive into this Nvidia stock rally. Also jazzed up about the rallies we're seeing in Coinbase and Robinhood after that stablecoin news last week. These stocks are just ripping right off our platform higher. And then to your point, big interview with Hewlett Packard Enterprises CEO Antonio Neri. He's coming to us from his big Discover event in Vegas. Lots of new products out. Also want to hear if they're going to close that $14 billion Juniper deal.
All right, we're going to be watching closely. We've got the opening bell and opening bid coming up next. Much more ahead on Yahoo Finance.